Hello everyone, I am Biswajit. Today I am presenting my project based Nifty 500 trading strategy, signal based performance study. I have done this project under the mentorship of Mr. Sri Trivedi. The main goal of our project is to compare various trading strategies for Nifty 500 stocks. For that, we use various signals like momentum, mean reversion, volatility, max factor, seasonality, etc. By using that signals, we try to find best strategy which performs best in terms of both return and stability. For evaluating the strategy performance, we uses two matrices. One is Sharpe ratio, which gives the risk-adjusted return, and another is CAGR, which gives the average return per year. By using these two matrices, we can just evaluate our strategy performance both in terms of return and stability. We downloaded our data of Nifty 500 stocks from Y Finance API. We used only adjusted close price. We used only those stocks which have at least 10 years of data available. So we get 329 stocks. We assume zero transaction cost, full rebalancing, and perfect liquidity. For signal construction calculation, we used weekly signals like weekly closing price and monthly signals, month end price. Momentum means buying the past winners and selling the recent losers. For momentum, we just calculate the past 1 year return and just order the top and bottom stocks according to that. For portfolio construction, we just choose top and bottom, uh, 10 and 20% stocks and construct portfolio with weekly and monthly rebalancing. You can clearly see in the table that monthly 10% stocks uh, giving the highest CAGR 7.56% and highest Sharpe ratio 0.75. You can clearly see in the plots also in terms of cumulative return also the monthly uh, 10 long short portfolio is giving the highest CAGR, highest return. 12-1 momentum means uh, just excluding the last month due to the short-term reversal effect. For that, you we just compute last 12 months minus 1 month's return to select top and bottom percentile stocks. For portfolio construction, we use top and bottom percentile with monthly and weekly rebalancing. You can clearly see in the table that weekly rebalancing with 10% and 20% long short portfolio is showing much lower result than monthly rebalancing. Monthly rebalancing, top and bottom 10 percentile strategy is giving highest CAGR 8.39% and with monthly 20 percentile long short portfolio is giving highest Sharpe ratio 0.91. You can clearly see in the plots also that monthly 10 percentile long short portfolio is giving the highest return in terms of cumulative return also. In reversion strategy, we assume that our stock price will return to its average. So we calculate the return of stocks for past 1 month and consider the stocks which gives much return as volatile. So we just buy the stocks which give less returns and sell the stocks which gives much returns. So For l- for portfolio construction, we just use uh, top and bottom, um, 10 and 20 percentile stock, uh, and long short strategy with weekly and monthly rebalancing. Clearly, with weekly rebalancing, top bottom 10 percentile stock strategy is giving the highest CAGR 4.62% and highest Sharpe ratio 0.50. You can clearly see that thing in the plots that weekly 10 percentile strategy is giving the highest uh, return in terms of cumulative return also. In volatility strategy, we just calculate the volatility of the returns from historical data of past year. In volatility, we assume that in bullish market, high volatile stocks will outperform the low volatile stocks. So, for portfolio construction, we just use top and bottom 10 percentile and 20 percentile stocks in terms of volatility for constructing long short portfolio with weekly and monthly rebalancing. Uh, you can see clearly in the uh, table that weekly 10 percentile long short portfolio is giving the highest CAGR 13.76% among them and giving the highest Sharpe ratio 0.96 among them. You can see that thing in the plots also that weekly top and bottom 10 percentile is giving the highest return in terms of CAGR also, in terms of cumulative returns also. In max factor strategy, we just assume that in past 5 day or 10-day look back period, these stocks which are giving highest single day return that are more volatile. So we just uh, buy the less volatile stocks and sell the volatile stocks. So, for portfolio construction, we just use top and bottom 10 percentile and 20 percentile stocks and just uh, use weekly and monthly rebalancing. Uh, you can clearly see in the plot in the table that with 5 day look back period, max factor strategy works much better than the 10-day look back period and uh, weekly uh, uh, 10 percentile strategy is giving the highest CAGR 8.88% and weekly 20 percentile strategy is giving the highest Sharpe ratio 1.13, which is the best among them. You can clearly see in plots in terms of cumulative return also weekly top and bottom 10 percentile strategy is giving the highest Sharpe ratio, highest cumulative return. In seasonality strategy, we just assume that stock just captures the seasonal trends. Suppose a stock is performing well in the recent in a month or week for past few years, we assume that it will perform well for the next years um, uh, in same time period. So we just uh, uh, for investing we just calculate the weekly or monthly performance in last 5 years or last 3 years window of a particular stock. If a stock perform well in a month or a week and in last 5 years, in at least 3 years of last 5 years, then we buy them, otherwise we sell them. For 3 years we use the 2 as threshold. You can clearly see in the table that 5 year look back period works much better than 3 years look back period, and 5 years with weekly rebalancing is giving the highest CAGR 10.78% and highest SAR ratio 1.00. You can clearly see in that plots also that 5 year look back period with uh, with weekly rebalancing is giving the highest CAGR, highest return in terms of cumulative return. In conclusion, we can say that uh, this strategy in this whole performance wise, this in terms of CAGR, the volatility top and bottom 10 percentile was based, which is giving the 13.76% CAGR, and in terms of SAR ratio, the max factor with weekly rebalancing top and bottom 20 percentile strategy gives the 1.13 SAR ratio, which is best among them. And the 12-1 momentum strategy works much better than other strategy and than normal momentum strategy, and the reversion strategy, each works well for short term period. Thank you.